So Lemonade, one of the companies I hold in my speculative investment portfolio, reported earnings last week. And shortly after it reported earnings, the stock actually took a nice little dip and fell about 12%, which means that your boy is losing a good bit of money. As a matter of fact, right now I'm down about 15% on my investment in Lemonade. But the reason the stock even fell had nothing to do with the actual performance from the earnings that they announced. It was more to do with an acquisition that they made. Lemonade announced that they are acquiring Metromile. As you guys know, Lemonade is trying to get into the car insurance business, and them acquiring Metromile makes it a little bit faster for them to be able to do that. Because one of the big things that Lemonade is able to do and has been able to do when it comes to renters insurance, when it comes to homeowners insurance, when it comes to life insurance, is they use data. Data is very important when it comes to insurance anyway. And so in order for them to speed up the process of launching their car insurance, Lemonade Car, which actually they launched it before they announced their earnings in one city, I believe it's in Illinois, in one state rather. And so in order for them to actually quicken the pace up, and in order for them to actually get all the information they need in order to launch in other locations, they decided to acquire Metromile. And Metromile, the main reason for this is Metromile has over 3 billion miles of roads covered, which is really good for them to be able to take that information and be able to put it into their systems and then to be able to use it in the best way possible. Then they also talked about telematics, which is something that Lemonade is going to use a lot in everything that they do, which the interesting thing is they've pulled out a quote from Warren Buffett about how Geico actually missed the use of telematics. And it says, on the issue of matching rate to risk, Geico clearly missed the bus and was late in terms of appreciating the value of telematics. They talk about how important it is for them to get this really right. It says that innovators, legacy free and built from scratch in the 21st century, are uniquely positioned to lead the industry graduation from pricing based on proxies to pricing based on continuous stream of data. This is a massive deal. And the reason why the stock dropped was it's a full-on stock deal. It's a complete stock deal. So if you own Metromile stock, you're just basically going to get Lemonade stock. It's a 19-to-1 deal, which means that for every 19 shares of Metromile, you get 1 share of Lemonade. And so that's why the stock actually dropped. We see this regularly. We saw this when Salesforce announced that it was going to acquire Slack. We see it all the time. When a company announces that it's going to acquire another company, the stock is going to fall, especially if they're going to do any kind of stock deal to make that acquisition. The stock of the company that's making the acquisition is going to fall, and usually the company that is getting acquired will actually spike back up. But actually, Lemonade is buying this company for about $500 million, which is very interesting because this company went public. It was worth over $1 billion. And since then, it has been on a massive downtrend all the way down to now being just worth over close to $500 million. So really, Lemonade is buying this company at a much better valuation than what it was earlier in the year. And so it's beautiful for us shareholders who own this company to know like Lemonade is not just throwing money out there just because they need to acquire and have all this data that they need for their system. They're not doing any of that. They're taking their time and they're being very measured in their acquisition process. So overall, I'm excited for this move because Lemonade needs this data. They need this in order for them to ensure that Lemonade car insurance comes out and they hit it out of the park, because car insurance is one of the biggest areas of you being able to make a lot of profit. So we'll see how Lemonade launches this. I'm excited for this. But anyway, let's dive right into some of the results from the earnings for this quarter. So the results came in and everything looks great. But one thing that I want to do this time around is actually to compare Q3 results through Q3 2021 results with what they estimated that they were going to give to us in Q2 of 2021. So if we look at the forward guidance for Q2 2021, they expected that they were going to bring in about $336 to $339 million. Gross earned premium would be about $76.5 to $77 million, and revenue would be about $32 to $33 million. How did they perform? Remember the number 336? They brought in $347 million in in-force premium. That is a great job. If we continue going down the line, they said they were going to bring in gross earned premium of about 77, came in at 80 million. Again, they beat the expectation that they set. And then the revenue, they expected it to be about 32 million, and they came in at $35 million. So overall, all the numbers look good. Everything that they announced or they said they were going to do for this quarter, they actually hit all their metrics for the most part. But there was one part that was kind of like, guys, you almost had a perfect quarter for me. Their gross loss ratio. And the gross loss ratio tells us how much money Lemonade gets to keep instead of having to pay out so much, which is where all that data that we talk about goes to use, is to make sure that they're giving the right insurance policies to the right people so that they make sure that they're covering all their stuff. When they started breaking down like what actually caused gross loss ratio to spike up, so they said our Q3 2021 gross loss ratio was 77%, up from 72% a year ago. Notwithstanding the fact that our newer products are demonstrating improving loss ratios, our business mix has evolved considerable since a year ago, with renters now comprising just 53% of the book relative to 70% a year ago. The lines of business have captured that share, home and pet, do demonstrate higher loss ratios than our more mature, stable renters book. In other words, because they're adding more and more businesses, and if we compare where they were last quarter to where they are now, as far as their breakdown of renters insurance, home insurance, pet insurance, last quarter, 56% was renters, homeowners was 30%, and pet made up 13%, and life made up only 1%. Now they're saying renters is actually 53%. So it's really good to see that they're continuing to grow out the business. But because they're continuing to grow out the business and grow out their mix, what is happening is their loss ratio is going out just for a short period of time, just to make up for those losses, because they're still learning those areas. They're still getting as much data as they need in those new areas, and as they continue to go with it. It says on here that we are seeing improvement in loss ratios. On an accident period basis, our pet loss improved by 4% sequentially, while our homeowners loss ratio improved by 52%. So overall, they're doing everything that they need to do in order to handle and make sure that they're bringing down everything, their loss ratio. Now, I would love to see their loss ratio to be in the 60% range, which is where like established insurance companies are, but we'll take it for them to first get to about 75%. They're still new, they're still learning the business, and they're still growing. So that's very important for me. Overall though, when I look at everything that Lemonade announced and everything that Lemonade talked about, everything looks good. And then one other thing that they talked about was the bundling effect. Bundling behavior is growing substantially across the book, with bundles now representing 8% of total in-force premium, compared to 0% prior to the launch of pet insurance Q3 2020. In Q3 21, we recognized a record volume of cross sales at $5 million and saw an increase of four times increase in the number of customers with policies with multiple lines of business relative to Q3 20. While the average premium per customer across our book of businesses was $254 at Q3 21, the premium per customer of our bundled customers is 3 times higher. In other words, the more they can get people to not just use Lemonade renters insurance, but also tack on their Lemonade pet insurance, the more premium they can get from people. Remember, premium is what you pay every single month to your insurance company so that when you need coverage, they'll cover it. As a shareholder, you don't want the business to be paying all of the money it's bringing in right back to for insurance claims and those kind of things, which is where that data is so important. The other thing we have to keep in mind is Lemonade is still a money losing company. They're not bringing in any profit just yet. They're still very much a money losing company, but overall they're growing. And right now it's all about customer acquisitions and continuing to grow for Lemonade. So now let's look at what the full guidance is going to be for the fourth quarter. They're continuing to say they're going to grow. They expect that they're going to bring in about $380 million in in-force premium and revenue to be about $88 million next quarter. And they're saying for the full year, it will be about $380 million for the entire quarter. And then revenue will be about $127 to $126 million. So we'll see what happens. We'll see how this whole story plays out. I'm excited to continue following the story of Lemonade. Let me know, do you invest in Lemonade? Are you a Lemonade investor? Do you feel like this company is way overvalued? Which I'm not going to argue with you on that point. But overall, I think this business is going to continue to grow, and I see it doing great things moving forward. But anyway, that's all I got for y'all in this video. I hope y'all learned one, maybe two things out of this entire thing. And if you did, hit that like button. If you loved it, hit the subscribe button. But I'm gonna catch y'all up on the next one. Remember, generosity is always greater than greed. God bless each and every single one of y'all, and your boy is out of here. Peace!